Hi, welcome to another episode on systematic trading and investing. This is Michael Thompson from JB Markets. So today we're going to have a look at, is systemized trading a scam? Before we do so, anything we cover today is going to be of a general nature. Anything we do go through in relation to CFDs or leverage product does carry a high degree of risk, as well as past performance is not a reliable indication of future performance. Topics going to have a look at is, first of all, what is systematic trading? Who uses these strategies, their performance, and why you should consider using this type of strategy yourself. So what is systematic trading itself? It's a rule-based trading strategy that uses price data, volume, can be fundamental data as well, to determine when to buy and sell an instrument. It also can be referred to as algo or quantitative strategies, and high frequency trading does fall under that category as well. The strategy falls in really two types of areas. They could be either trend-based, or they can be reverting back to an average price or reversion to the mean. So, for example, your RSI indicator, buying overbought, oversold, that's a reversion to your mean strategies. Here's an example of a simple systematic strategy, something that most investment traders are already familiar with in terms of indicators, which is your simple moving average. Now, for those who've never used this to become developed to a systemized strategy, this is an example of how you could do so. Now, this is looking at firstly a price data over a week, more of a medium to longer term time frame, and we're looking at a stock here, in this case CBA. It could be any stock, the general principle is the same. So if you have a look here, when we look at the blue line, which is representing 12 weeks of price, that represents 3 months of price action. Now if you have a look at the 52, which is the red line, that represents 1 year of price. So what this strategy is trying to determine is when trends are changing to the upside and looking to buy in that direction, and then looking to close out of that position, the long, when the trend does change and reverse back the other way. So simply our rule would be is we buy when we cross over above the simple moving average of the 52 week, and then we simply close below, which is the blue line closing below the 52 week, which simply exit the trade. As you can see, an example highlighted there, there's two trade opportunities that result in being profitable. The most important thing you notice that with this particular strategy is avoiding losses when markets do go declining. Okay, now who uses these type of strategies? Some of the large hedge funds in the US predominantly use this strategy. Not so much in Australia. It's not a big strategy. Most funds are pretty passive in terms of buying and just long-term holds. The other one that's probably most well known in the space of systematic strategy is known as your CTAs, Commodities Trading Advisors. They use this, predominantly this strategy, trend following, to extract profits in various markets, and that includes equities as well as commodities, oils, a basket of different markets throughout the world. They use the exact same strategy, and they simply deploy their strategy across the different markets to find trends that are emerging. The most famous of the group is known as the Turtle Traders. They made this particular strategy famous after being discovered or being created as a group in the 1980s. That's another topic another day, but that's simply where these strategies have become widely used and what most known for. Top 10 hedge funds in the world. Now, Bridgewater Associates is not 100% systematic, but they use elements of using rules to determine buying and selling, even on fundamental data. AQR has a equity long short fund which uses systematic approach to that. Man Group is the classical trend following strategy which looks to buy, as mentioned earlier, various different markets ranging from commodity indexes, a whole basket of markets using the same strategy, buying strength and selling weaknesses. The same applies with Winton Group, which was the founder of Winton was the one that sold the strategy to Man Group. So the same founder is applying the same strategies or variations of that strategy in the current fund in the Winton Group as well. Renaissance Technology is really a class on its own. It's really filled with some of the smartest people in the science and mathematical in any endeavor when it comes to extracting data. They've got some of the smartest people in industry working in finance to trying to find profitable strategies. They are 100% systematic, and their strategy is very shrouded in secret because they never share any of those secrets with anyone. and being one of the most probably in the space successful when it comes to return and a long established track record, which we'll go have a look at shortly, is the envy of the space. And the rest you can see, and then BlackRock would be more in the same space of ETF. We're creating passive funds using a systematic way. So Renaissance Technology, here's the one where most people would like to emulate in the industry. Having a look at their past performance, which is you can see in the chart there, this is one that a reporter went and interviewed them. They will really take interviewers and give interviews themselves. So this was a rare occasion where the interviewer went and sat with them and asked a bit about what they do, how they go about it, and obviously obtained this performance result, which you can see is enormously above your average return of stock markets. You can see some years they even hit above, just slightly above 100%. What's the most important to note is that their track record started in 1988. The first few years they were kind of figuring things out, trying to get their strategies to work. Then on the third year onwards, it just went steaming ahead. The most important thing to note about this particular fund, they have also retail funds, but this particular fund, the Medallion Fund, that's their flagship fund. You cannot enter as an investor. It's only reserved for employees. It's been closed to external investors since 2006 from memory. So the fund has been performing exceptionally well after fees. So these are the results even after fees taken out. And their fees are probably among the highest in the industry. They charge 3% management fee and 33% on performance. So even after those fees taken out, you can see in some years triple digit, but on average double digit figures, close to the vicinity of about 30% per annum. So exceptional results, and given the fact that they've done this for almost 20 years, it's quite amazing for a fund to go this long, generating those sort of return. And on the scale that they're on, they're in the billions. It gets really extremely difficult to generate double digits when you start hitting the billion-dollar figures. AQR fund is an interesting fund I wanted to have a look at, just to show you that long and short can be done in equities. It's quite noted that these particular trend strategies have been used in the equities, the future side for such a long time. A lot of people do wonder how effective it can be on the equity side. So here's a fund that is run by AQR, systematic fund, and this is comparable to the group here, which is the Morningstar long short equity category. You can see over the course of since 2013, they've outperformed the group peers. So it's obviously not a smooth run, but most up until 2018, it's had a really nice good run and a couple of dips along the way, but predominantly rising in performance over that duration. So that's quite good to see, equity side of it, because as I mentioned, it's been predominantly dominated by the futures market. Now, your typical trend follower, Dunn Capital, probably has one of the longest track record when it comes to the trend strategy in this group of traders as well. This spans back the record to 1975. So close to 40 years of track record of trading successfully and profitably over that duration using pretty much the same strategy with some minor adjustments to that strategy during that duration. It's an interview that I did listen to Bill Dunn do. He did explain that predominantly their strategies they've used have not really changed since he first developed it back in the 70s. So it's quite amazing. Same sort of strategy. It's been working year in, year out. It hasn't been smooth, of course. So if you look at the blue line, that's his return for the fund. There have been some dips along the way, but certainly it's been powering ahead after every dip that it had. Probably the longest dip was notable was around 2007 and 8, where it went through periods of sideward action and declining markets, declining on the fund, and eventually powering ahead. That's the nature of trend strategies, that you'll have periods where things will not work, where it's consolidating in the market, and then you'll have breakout in the market and stocks or commodities are rising or falling. So the average return for the fund was 17.05 compared to the total return, which is your dividends included, is 12.21% over that duration. Now that just under 5% difference makes a huge amount when you compound that. So over the same period, if you look at the S&P total return, $1,000 would have returned $154,000 over that duration. But $1,000 in the Dunn composite fund would have performed and given you almost $1 million. Huge difference between what the S&P would have given you. Obviously, with the bumps along the way, most importantly, it got to new equity highs and profitable during that duration, and that gives you the testimony of time that strategies that are developed for capturing trend do persist, and this is an example of how this strategy has been surviving and thriving over the course of 40 years. Now, conclusion. So rule-driven decision making avoids the human biases which we all have. That's the biggest thing about systemized trading, is that it helps minimize, if not eliminate, your emotions to get involved in your decision making side. Also, you can test the strategy going back in time, so back testing. It's not the means of the strategy itself or the holy grail, but without testing a strategy itself, which you don't have any basis to result in the past, how confident would you have moving forward? And particularly when you have times when you're losing money, drawing the account down. That's one valid I found very important. And the strategies can be fully automated. So simply, if you're running a weekly strategy, you generate the buy and sell, and you simply execute the trades. So a little time is spent outside of the research of the strategy itself. The other thing is that you can use multiple strategies. Since you're using a systematic and rules-driven approach, you don't need to know everything about the company, and you don't have to spend or become a specialist in a particular field, company, or area of a stock market, or any market for that matter. So you can have multiple strategies running and deploying capital to become more diverse and giving you better risk-adjusted return. And the rules, most important, by having rules, you can measure and test, because if you can't measure what you do, you cannot improve it. That's really vitally important when it comes to any strategy. Unless you're recording what you're doing and know what you're doing consistently, and then recording it as a way to measure for improvement and measure for adjustment to what you do, you have no real way of improving your results. That's the most important part of when you trade, is keeping records. The other part is the strategy can be scaled. So if you're obviously using a small capital like 10,000, 100,000, the strategies can be deployed in various different markets. As you've seen with these billion-dollar fund, they use a number of different strategies to deploy their capital, but the strategy can be scaled, and for investor itself or trader, you can scale it quite as large as in very large figures of millions, if not up to $1 billion fund. The most important thing about these particular strategies is that you need to be able to develop and spend the time to understand them, and understand how to execute it and manage your emotion when you're running these strategies, and understand the behavior. So that's all for now. I hope this has given you a better insight to systemized trading, and whether this will give you the next confidence, take a step to take a look at it, and to spend some time to research more about them, as they can help you in your strategy as they helped in mine. Anyway, thanks for watching the video. If you like the video content and you would like to cover any particular topic around the systemized trading or anything part of trading itself, I will endeavor to go through that. Hit the subscribe button, and I'll see you in the next video.